Today you will learn how to use the RSI indicator in two different ways. First of all, we have to know what RSI stands for. So RSI stands for Relative Strength Index. It measures the magnitude of the recent price action. As you have loaded your RSI indicator on the TradingView, you can double click on any of these lines, go to the style and disable the RSI based MA line. I'm disabling it just because we won't use it today. First way to use this indicator is to see if the asset is overbought or oversold. This indicator can help you determine the possible price reversal to the downside or to the upside, but you must always have another confluence to enter to any trade. Generally, everything above 70 is determined to be overbought, and everything below 30 is considered to be oversold. When price is overbought, like we have an example right here, it shows that people bought too much of the asset in a small period of time, and the reversal is likely to happen. Vice versa, when people sell too much of the asset in a small period of time, it becomes oversold and the reversal is again likely to happen. Before I will show you another way to use this indicator, please drop a like to this video and subscribe to my channel if you enjoy the content I am making. So the second way to use this indicator is to spot the RSI divergences. We look for bullish divergences when price is making a retracement to the downside, and we look for bearish divergences when price is making a retracement to the upside. Let me show you the example of how to spot a bullish divergence. First of all, we have to see a price making a higher low. So we can see we have a low right here and a higher low right here. The RSI indicator should make a lower low. So we have a low right here and it makes a lower low. It gives to us a bullish divergence. As you can see, it played out really well. We had a price action going to the upside and eventually it went to the upside further more. Right now, let's look at the bearish example. You can see that the price is making a lower high, but the RSI is making a higher high. This shows to us that there's a bearish divergence, and as you can see, it played out really well because we had a really nice price action going to the downside. You can use this RSI indicator in any of these time frames, but of course, the higher the time frame, the more probable it is to play out. Now, as you know how to use this indicator, you can implement it into your own strategy, or you can check out my free public trading strategies, which are popping right now on the screen.